Welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at BackupBradley. Well. I think this is going to become an important day to remember for all of us in crypto history. You know how we've covered the OCC, the Office of Comptroller of Currency, so much. And we just recently have been covering the talks that Brian Brooks, now the head of the OCC, former chief legal officer, will be writing a federal charter for virtual asset service providers as well as for banks, has released this press release from the OCC. Federally chartered banks and thrifts may provide custody services for crypto assets. The Office of Comptroller of Currency, OCC, today published a letter clarifying national banks and federal savings associations' authority to provide cryptocurrency custody services for customers. Come on in. National and state banks and thrifts have long provided safekeeping and custody services, including both physical objects and electronic assets. The OCC has specifically recognized the importance of digital assets and the authority for banks to provide safekeeping for such assets since 1998. In the letter published today, the OCC concluded that providing cryptocurrency custody services, including holding unique cryptographic keys, associated with cryptocurrency, is a modern form of traditional bank activities related to custody services. This is so exciting. Crypto custody services may extend beyond passively holding keys. From safe deposit boxes to virtual vaults, we must ensure banks can meet the financial services needs of their customers today, said Acting Comptroller of Currency Brian Brooks. This opinion clarifies that banks can continue satisfying their customers' needs for safeguarding their most valuable assets, which today, for tens of millions of Americans, include cryptocurrency. The OCC also recognizes that as financial markets are increasingly digitized, the need will increase for banks and other service providers to leverage new technology in innovative ways to serve their customers' needs. By doing so, banks can continue to fulfill financial intermediation function they have historically played in providing payment, lending, and deposit services. Today's opinion applies to national banks and federal savings associations of all sizes and is consistent with a number of states which will already have authorized state banks or trust companies to provide similar functions. Oh my goodness. It's here. Now we're talking about the masses for real. This just changed the game. Look, there's a lot of implications here. One is the obvious, that the masses will now at some point be able to quickly go to their bank they have been a member of or a customer of for many, many years in most cases, and they will be able to buy and custody digital assets with that bank. So if you're comfortable with Bank of America or some other bank that's, a well-known bank, you won't have to trouble yourself with opening up an account with Coinbase. Well, let me tell you another thing that I'm thinking of. When I think about a level playing field, that they've used this phrase so often about allowing banks to be able to have access to digital assets for their customers, I think of something else. Just recently we had the FATF deadline for travel rule AML KYC, and only 10% of the exchanges globally were in compliance to date. Well, now that they have just opened the floodgates for the regular national banking system in the United States to be able to custody digital assets, what's going to happen to the exchanges, the coin exchanges, that are not compliant today? I wonder if we're not far from seeing some kind of consolidation in the market, because I'm telling you right now, it is obvious to me that the national banking system is not going to miss this opportunity. They're going to step into this market in a very big way, and the masses will feel extremely comfortable being able to go out and get digital assets at their bank and not have to go through the fuss and muss of opening up and giving their information to some brand new exchange that they don't know anything or feel comfortable about at all. How much longer until we see Fidelity directly, right, and pushing this on their platform, knowing that they're already partnered with Coinbase? I mean, there's so many implications from this that are really kicking open the doors. I just saw this, and look, I mean, we've been covering this for quite a while, and I think this is really the kind of competition we need to see in this space. We need to see the traditional firms, the traditional legacy firms, banks and institutions come out of the sidelines and the shadows because they've not had the regulatory clarity to be able to provide it. And now they can get in this game. And I bet you we are going to see them come into this space in such a big way. I can only imagine what this is going to do for the crypto space. But I tell you this, somebody said a long time ago, you know it'll be time to sell your crypto when somebody's in line in a store somewhere like a Walmart or a regular grocery store, and they turn around to you and they try to tell you and I about crypto. Hey, you need to get some of that crypto. I can get it at my bank now. It's going to go crazy. You know, this moment has begun. I mean, I got to be honest with you. This is just, I mean, I didn't think it would be till the fall because he spoke about the federal charter he was going to release in the fall. And maybe there will be obviously a further detailed charter released. But I got to be honest. I mean, this is absolutely remarkable. And I'm sure that we're going to see things unfold rather quickly for the traditional banks out here to provide access for their customers to get digital assets. Here's the other thing. You know, how tough a sell is this? You know, for the banks themselves. You know, everyone's scared of the markets. I think pretty much, you know, I think pretty much everybody out here understands with 30% or north of 30% of people that have lost their jobs from a pandemic understand that whatever we're witnessing in the traditional stock market, it's being pushed by printed money from the Fed. They're buying everything up. So I think we all understand that there is some kind of a pay the piper moment headed down the pipe, and it's going to come. And it seems to me as well that allowing banks to get into this crypto space game is allowing banks to also have another avenue for their clients and customers as well as themselves to create a new revenue stream in this digital custody, digital asset world. I couldn't be more excited. Shout out to Brian Brooks for, you know, all of the hard work, and he is not done yet by a long shot. I mean, look, we saw him say it in the Unitize conference. We saw him talk about it and say it in the podcast that he did on the American Banker thing that we covered a handful of weeks ago, a month or two ago. And it is already unfolding. Make no mistake about it. I mean, and I'll be glad to make a video says it isn't later, but as far as I'm concerned, this is a moment in the crypto space history that will go down in the books. There's no question about it. I'm glad each and every one of you, as well as myself, are here to witness it for the ride. You know, Nate, I got to shout out Nate. Nate got me my moon helmet, and I may have to actually get this thing out and start shining up this visor. Who knows what the end of the year is going to be like after something like this. All right, guys, that's going to do it for me. I just wanted to bring you this information really quickly. This is really a lot to handle, but I got to be honest, more to come on this as we get more information. But very exciting to recap. Federally chartered banks and thrifts may provide custody services for crypto assets. It is officially a brand new crypto space, and the banks are here. And they're not going away. All right, guys, hit the like and subscribe. Share with somebody you know. You never know. This is Crypto. Head on a swivel. I'll catch you on the next one.